Hello, guys. Welcome back. We are back. So the previous video that you guys had was about trend lines. I usually give you guys time to go practice the specific trend lines and whatnot. Simply because with this thing you need to train yourself to be able to see. Yeah, you need to train yourself to be able to spot the basic A levels, the V levels, the QMs, yeah, the failed QMs. You need to train yourself to be able to be seeing them over and over and over again. Because if you aren't able to spot your key levels, then ideally you'll end up messing up a lot. And I ain't kidding. You'll be, I don't know. But just know Dick told you guys, if you don't do that, don't give it time to practice, you will end up messing up. Now, that being said and done, if you're having doubts, if you have questions, comments, concerns, I believe you guys watched the first video where I had, not the first video. In this series, I'm having a series of consecutive videos. The first video was where to start in forex trading. Yeah. So this whole series is not for me to teach you this is where you enter. This series for me to help you get to understand this is how the market is moving. So if you're thinking about using entries or whatnot, there's so many different ways you can decide to enter a market on the internet. I have posted some. You can go watch through the previous videos that I shared the recordings we had from guys in the community and myself, where we talked about getting entries and just seeing what happens in the market, right? That is number one. Number two, I'd like you to, yeah, after you're done with practice and you know you're completely comfortable with the A levels, V levels, and whatnot. Now, here comes the fun part. Why do I call it the fun part? This is supposed to be on Monday. Monday. Why did it do that? Style displacement. Oh, I should do this Monday. Now, okay, lock. Yeah. Now, just a small quick recap before we continue with our business of the day. We initially talked about the A levels. Oopsies. Yeah, we talked about the A levels. It comes back. Not why am I saying it comes back? We talked about the A levels. We talked about the V levels, and we talked about the gap. Okay, these are the only key levels that I mention and the only things that I talk about. Okay, as key levels, not whatever it is that you might think. Yeah, that's the key level, the A level. That's the key level, the V level. And that's the key level, the gap level. The gap is in lines with whichever direction the market is moving to. It can be bullish, it can be bearish. It doesn't matter. It doesn't matter. Okay, so that's the gap. Now, the first video I talked about the A level and how it's a support, and I told you guys to do your experiments, get to see. That's wait, where did I get to see? This is the A level here, right? What did the price do after the A level happened? This is a V level that was created over here. You can see this is a V level. Okay, price broke through that V level. What happened there? You are supposed to check it for yourself, or this is also an A level over here. It created an A level, broke to the upside, broke to the downside. What did the price come do there? Yeah, classic, right? Classic. Okay, This is an A level still. This is also an A level still. Wait, I took the instead of that. Should be pressing Alt T. This is also an A level. Price broke to the upside. Where did price come? It came back tapped, then rushed to the upside, took that key level, then dropped. Yeah. So if you don't know how the A levels and the V levels work, then I don't know. I don't know. It's all up to you. This is a key level here. What did price do? Yeah, that was the first few videos that I did on how to use the A levels and the V levels. Okay, now we have aligned our key levels. Everyone knows the key levels, everyone has done practice, because when I look through the videos, it's been like 2 weeks since I gave out this information, right? Now, within that 2 week period, I have expected you to do the A levels, the V levels, and whatnot. 2 days ago, I dropped a video on trend lines, okay, on how these trend lines can help you get trades wherever. Because if you align this trend line with this trend line here, you could have gotten the trade that came here, as long as it's in line with your specific key level, okay. The trend line just help you to work the key level because there was a gap here. Yeah. So this trend line, this whatever, they in lines with each other. You tap it and it went. So there are very many ways you could have gotten this sell from here. This buys came from where? Here? No. There. Yeah. You know which key level it is. Price came closed there, opened here, went down, broke. Okay. Tapped, go. Now, that being said and done, we are done with the recap. Now that we are done with the recap, let me go to FXCM because they have similar handles to fx.com. Now, we talked about our key levels, I've talked about trend lines. Now, I assume you guys have noted what happens when price comes to a key level, right? I'm certain. I'm in the lines of 80 to 90% that you guys are certain, or you guys technically know what you're doing when you're marking in your key levels and whatnot. Now that I am through with that, I'll go to the next thing that I believe I should be talking about. What's the next thing that I believe I should be talking about? The storyline. Now, I talked about the storyline. I didn't go in depth about the storyline. So let me show you an example. But before I show you an example, let's talk about the theoretical aspect of the storyline. Now, we have a key, let's say we have a key level here. Okay. So our beloved, let me remove these charts from the candlesticks. Let me remove them hide. Okay. So we have our key level here. I Let me make it simple. Key level. I hope my keyboard is not loud making noise for you guys. I don't usually edit the videos, I just post them raw. Key level. I'll watch them in the near future. Key level. Did I just press F? Level. Yeah. So we have a key level here. Price comes, it can be a bullish key level. That price came like this, created that key level. Now I have to name more key level because of this. Yeah, we have that A level. It could have even been a V level. It don't matter. It don't matter. It don't matter. So now when price comes to this key level, assume this is the 4 hour time frame. For this is the daily time frame. Okay. When price comes taps this level, or price has come to the daily time frame, created that key level, you will go inside when whichever time frame you're in, you will go inside and that key level. There is something that we call daily reject daily, weekly reject weekly, monthly reject monthly. What the hell are these words that I am talking about? What does it mean? How is it supposed to help you when you're trading? Now, you'll notice this. When price creates a key level in whichever time frame or whatever, when price creates a key level, you expect price to react there. But how do we know that we have a storyline? How do we know that we have a storyline? And what the hell is even a storyline? So a storyline is price deciding to give us its presence on a specific said direction. Okay. So when we say storyline, it means daily has started moving a specific direction. Yeah. It might be favoring bulls, it might be favoring bears, but it's giving you a specific direction. I'm moving from this level to this level. My storyline is bullish or my storyline is bearish. Now, I've talked about that. If you have any questions, drop it down to the drop it down on the comment section. Okay. And guys, I already told you guys, Dick is here to teach you how to look at the markets and how to get the direction. Yeah, mine is just that. So if you have any questions, comments, concerns, drop it in the comment section. You can DM. You have my Telegram link there, and so on and so forth, right? So price gets to this level. After it's gotten to this level, it closes below. So it created a key level. It rejected this daily key level. Now, after this happens, you can't wait for price to come on the daily time frame to react at this level so that you can be looking at entries. You will wait so much because the daily time frame takes its time. The weekly, same case. Monthly, even worse. So these prices take time to give you their own storyline. But on the daily, you can easily get a 4 hour to tell you if the daily storyline is in lines with whatever trend that the market is moving. Now, this is a key level. Price on the daily came tapped and closed. Yeah? It might have closed even like this. We have no specific way of saying that it closed. Okay, this is in the daily. Now, what I expect you to do, since it happened in the daily, I'd like you to do this. Slide down to the 4 hour time frame. 4 hour. Okay, daily D. So you will see DRD. DRD means daily reject daily. On the 4 hour time frame, you are going to check for breakout. BO breakout or shift. I do not know if I talked about shifts in this channel or what. I do not know, but yeah, you'll go look for a breakout after a daily reject daily. So the price closed bearish. Okay. After price closed bearish, you sweep down to the lower time frame. Then we look for breakout. I hope you're writing down these codes. Now you will see it like this. Since price went to tap in here on this lower time frame, you'll see something that happened like this. It went up. Hey, let me just remove the magnet and then I can draw this well. Removing magnetar. Okay. Now price is moving like this. It's going up. It's going down. It's okay. Let me just do this. This is the daily time frame. We go to the 4 hour time frame. Now on the 4 hour time frame, we have this. Okay. Now price is moving like this. It's going up. It's going down. It's going up. is going down, is going up, is going down, is going up, is going down, is going up, is going down. Then it comes, there could be a week, then it breaks. Let's say it goes like this, then it breaks to the downside. Now, let me just align this well. That is the daily key level. It doesn't need to have this thing here, but if it has, then better for you. Okay. Giddy giddy maji maji. Higher. Now that we have this, who can boggle me? Who can boggle me? I say, who can boggle me? I am unbogable. I should have gone to the 1 hour to make this thing give me more space. Anyways, we will work with what we have. And I believe everyone is as patient as I am while we do this. I am removing what we call stupidity from your head and from other people's heads as well. It feels like I still have the magnet on, I swear. Anyways, so price comes, after price coming, then this this is what we call a breakout now. When price is moving to the upside, like this, like so, when price is moving to the upside, it's on an uptrend, right? That's why I'm seeing higher, low, higher, low, higher, low, higher, low. This is the highest point. Now, after this highest point, we have this point over here. Okay, this point over here. When price closes below this point, can you see that point? That is a transition. That is a breakout. Price broke out. It doesn't matter if it is as small as this. Yeah, as long as this point over here, you can see this point is slightly lower than this previous point where the blue line is originating. We'll check on the higher time frame. We go to the higher the highest point in our structure on the time frame lower, because I am using a daily as an example. This is the 4. This is the daily that has that week, and this is the 4 hour. Yeah. So ideally the 4 closed here. Okay. Then the next day it broke out or whatever. Okay. We'll go down to the 4 hour time frame, then check if you see a breakout like this. So when you see a breakout like this, you can start singing. Yeah. Why am I saying you can start singing? This is an indication that price will dip or go up in matters regarding your specific time frame. Okay, because price was moving like this. Control, 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 high. It came here, created the high. Then it came here, closed below, then it started dipping. Now while it was dipping, this next day, there's a day that came in here. This day here, price kept, oopsies, price kept coming like this. After it's coming like this, price closed. And after price closed, it could have broken like this, or even this. It doesn't need to have this. It can be even this is what broke it to the downside, and this one is like this. This is an indication that on this leg, this whole leg over here, this whole leg, we're looking for ourselves from this leg, because this means that the storyline has shifted and it has decided we are in a bearish trend. Okay, and price will move from a daily key level to a daily key level, a 4 hour key level to a 4 hour key level, and so on and so forth in matters regarding these time frames that you see here. A 6 months to a 6 months, 12 months to a 12 months, and so on and so forth. Right? Now, when we get to see this, we are certain that we have a bearish storyline. Okay? Now, let's go over to the chat. Chat. Tuingie kwenye cheti, as my people say. Now, you can see over here, price went. Okay, let me take back my magnet. I love my magnet because I am very precise. I love it being like that. Okay, this is the daily time frame, right? Price went, created that week high, then it closed there. So I have a key level here. It is a daily key level. Let me go to the 4 hour. Let me go to the 4 hour. Now, on the daily time frame, you can see now, as you guys can see, you guys should be very keen because you're working with candlesticks, and brokers print different candlesticks. So you should be very keen, very aware of whichever candlesticks and how your broker tends to behave. Now, as you can see, price was moving from here. Let me just remove this from here. Price kept moving to the upside. Okay, it kept moving to the upside, but here it created this candlestick. Okay, then the bullish broke out and went to this high. But if you're keen enough, we had our day. Our day started. Our day was moving like this. Let me go back to the daily time frame. Let me go back. Let me go back. Mbaka. Mbakas. Mbakas. Okay. So this was our day. Our day started here. Let me mark it well now. Okay. So that you guys do not, and I repeat, you guys do not feel left out. So this is our candle, our daily candle. Daily candle opened here. So I will take my pen seal settings so that you guys can see. Trading is simple. You guys want to make it hard. That is where the candle opened, right? You can see open. This is where the candle closed. I will write closed. Closed. Okay. Now, apart from that having a closure, this is the highest. That is the highest point. I will rename HI. I'll call it high like I'm saying hello to you guys. And after creating that high, the candle also has this, and I will call it low. And oh, because I am a lazy bum. So I have a high, I have an open, low, high, and close. Let's go to the 4 hour. Now, this is how we are going to do the mapping, getting to know how the candle behaves. How the candle behaves. Now, how are we going to know this is the open, this is the high, this is the low, this is the close? Very simple. We have this low. You can see this low. This is the candle that started the day. Okay? Because this ended at 22. Ah, this started at 22. If you add 4 hours to that, oh my days. This time, which time is this? Set price, inverted, regular percentage. Okay. Um, yeah. This one started at 2. Oh, this is gold. Gold usually opens much later in comparison to other time frames. So this one opened at 2. So over here on this line where it is open, this is 2 a.m. If you're not certain about it, go to a lower time frame. Let me go to 30 minutes so that you guys can actually see what I'm talking about. Maisha ya trading inamaliza, but itakumaliza kama huna mwelekeo. Now, as you guys can see, this is the lowest point, right? The lowest point happened at 3. Before 3, this was 230. Before 230, this was 2. Before 2, this is where the market opened. And you guys can see 0030. Actually, the market opened here. So this is the open, this is the low. Wait, this is the high. 00. Where's my daily closure? Let me see. Oh dear. Oh dear. It did not take my daily. Let me take this. Bring it back like boom, 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 boom. Now I have two. I have low and high here. Let me write close. Oopsies. Anyways, you guys know what I'm talking about. I am not losing you. And I'm explaining this like I'm talking to little kids. Now, when we're in 30 minutes, okay, then you slide over here. Freaking hell, my internet is not interneting. Anyways, yeah. So if you check, there's a clean gap between the daily close and the high, because the close is exactly here. Even though the day did not start at, okay, yeah, this is the 30 minutes. If you want to refine more, you can go to lower time frame. But I don't think it will give me that data. I do not believe it will give me that data. Up until date, I don't see the need to be paying for trading. Let me see 15-minute time frame. Yeah, 15-minute time frame will get. Now, when you check here, you can see this is where the day closed here, down here. So the day opened here. Woohoo. The day opened here, down here, opened here. It went up, went down, then flew. Okay. Then went high, then closed here. Okay. That's the high, open, low, high, close. For bearish, it's similar but in a different direction. Open, high, low, close. That's for bearish. Now, I am talking about storyline. Let us not forget. I am talking about storyline. It's already 3 a.m. Oh my goodness. Time will hit you guys up. Anyways, you guys can see. We already mapped out our levels. And after mapping up our levels, we already know that price created this as the key level, and this one was the highest for that day. I don't care about this highest. If I am to be honest with you guys, at the moment, we're not caring about the highest. Now, and also this lowest, we're not looking at that. Because our key level is this one, and maybe our key level is this one. I don't know. Maybe if you go to the day frame and the high daily time frame, then check, we'll see this is our key level. And even price today, I think we reacted on that key level. Maybe not. And this day is when it reacted on that key level. and this day as well. Like that key level tends to hold price, be it daily, weekly, monthly, wherever. Yeah. Now, I digress. We're back to our daily time frame. We had our key level drawn on the daily time frame. That was our support. When you go to the 4 hour and you check, so this is where we had our key level here. So on the 4 hour, you can see price did this. It went down. What the fuck is it? Freaking hell. Fudge. My computer is sort of hanging. So price went like this. It went down. This is the bearish candlestick, not this one. This one went high up to here. Then this one went low. This one closed bearish. Then this one went high. So up until here, even though we had this high, this did this. It went high. Came here, went like this. Up until this did this. Yeah, up until it did this. We had no reason to sell here if you were going with the daily storyline. We had no reason to sell here, we had no reason to sell here up until this was broken to the downside. Now we knew we are at a bearish storyline. So we expect price to come back inside here and we can take our sales and go. Okay, that is how the storyline works. And after it tapped this daily storyline showing us we are bearish, after it did that, we will be looking for sell trades from here. After this one closed like this, we are looking for sell trades. So this is not a miracle that price came, tapped here and sold. It also gave another breakout. As you guys can see, it's a breakout. Like I told you, price goes, creates that, then it breaks out. Okay, after it creates that breakout, do we have any key levels here? Yes, we have this one, we have this one, we have this one. So we expect price to go from, because it tapped this daily and it closed bearish, it created this another one. Then this candlestick for just that one day created a bearish storyline. So it's confirming what we already know. So we are expecting it to go from the daily level to another daily level. Okay, this one might be in lines with the weekly. Yeah, because if you see, we can count 7. 1, 2, 3, 4, 5, 6, 7. 1 week. 1, 2, 3, 4, 5, 6, 7. Another week. 1, 2, 3, 4, 5, 6, 7. Another week. 1, 2, 3, 4, 5, 6, 7. Another week. So if you woke up on this week, you were supposed to sell because a bearish storyline was confirmed. So Q, that sell came from off of the weekly storyline, and it was supposed to ride from the weekly level to another weekly level, or this one from a weekly level to another weekly level, the daily level to another daily level. Yeah, that's how these things always operate, and you have to be keen on your time frames. Otherwise, you will end up messing up or end up getting stopped out, and you'll be asking, "But Sage, you said the storyline moves from a daily to a daily, a weekly to a weekly, and so on and so forth." Okay, yeah. So that's how storylines works, and you can go check on very many different pairs. You need not stick to gold. Yeah, you need not say this is where I'm focusing on and you keep losing. You can go check. Okay, come here. This is GBP, JPY. Okay, let's take this here from this level here. Oopsies. Yeah, let's take from this level here. You guys can see this is the daily. This is a key level that was created. After creating this key level, if you go check here on the 4 hour time frame, I am very certain we had a breakout. Now, the daily key level was here. Okay, I believe that is the daily key level. But if you go over to the 4 hour time frame, 4 hour time frame, you could have gotten a trade early. Why? This daily key level price had broke out. And here you can see, look at the time, 12, 4, 20, yeah, that's 8. You could have known price is very bullish the time this over here. Oh, not here, sorry, over here. Because this is the lowest point, this is the structure that was made, okay? And this on this structure, price broke to the upside. Yeah, you need not wait for this one to be broken. Just this one is more than enough for you. Okay, this is the lowest point. The structure previous, that one there, and yeah, it broke that structure. After breaking this structure, and it was up here, you could have gotten this entry and you ride it from a daily level to a daily level. Now, let's say you didn't take it here. Yeah, you didn't take this trade here. You didn't take this trade here. That was in line with this. You didn't take that trade here or this trade there. But price broke out. Okay, you can see I was waiting for this one. This is more in lines with the daily breakout. Okay, fine, well and good. Price went, then it came back. It came back down to which levels? It came back down to these levels here. Okay, came back down to that levels over there. Now, when price comes back to this level, you make sure which key levels are in line with that. Is it in line with the daily key level? Yes, I expect this price to hold and it will move from a daily level to a daily level, no matter how many taps I get. Okay, so here price broke out, came back, tapped, moved up there, came back, moved up, came back, give you some pips, came back. Look, it did not even close below this. Okay, but you can see it's like it went deeper. There was this, you might say it went for that. Wait, did it come for this one? Yeah, this this is almost as, it is almost like a camouflage. Okay, there's something, but that is not in line with Malaysian SNR. So I will not be talking about this in that aspect. But if I'm talking about this, I'll just talk about it as a gap level. So price went for this gap key level simply because this one, you can say it went for this level and also decided to take this one. But we need to look at other different brokers so that we know if this one was tapped, because you can find that in a smaller time frame, this one had been mitigated. This one might have been mitigated on a lower time frame, so you didn't expect price to hold there. Same case with this one, you might see that it had been mitigated, like it was not fresh. Okay, so price had to go for a fresh level down here, then it could move to the higher side. But you can see price came back even after this. It broke structure to the upside, then came back to this daily level around over there. Then it used it as support to push it to the upside, and price kept rallying to the upside till date. Yeah, but not many people can hold a trade that long. Not many can people can hold that a trade that long. Now, I shared a concept that's in line with that, and I believe you guys have learned one or two things. And if you felt like something is missing, I believe you have something you need to put into whatever you felt that was missing. Now, what you're going to do from here on out, yeah, go to your charts and practice, 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 and see how your key levels end up holding price and how that break or structure assists. Yeah, if you're in daily, you go to the 4 hour. If you're in 4 hour, you'll skip to the 1 hour. If you're in 1 hour, you skip to the 30 minutes. If you're in 30 minutes, you look for breakout in 15 minutes, and so on and so forth. Yeah, if you're in 12 months, you look for 6 months. If you're in 3 months, you look for a month. If you're in a weekly, you look for a daily breakout. Yeah, that's how you get to know your storyline has started. Anyways, if you watched all the way to this specific minute, it believes that you are learning, you learned something, and make sure you leave a like, or you can just hit the subscribe button. Yeah. Anyways, that's all I had to share with you guys today. I believe you guys are conversant with the trend lines, and apart from being conversant with the trend lines, I believe that you're currently very good with key levels. Okay, so yeah, that's all I had to share with you guys. See you all in the next one. Pew pew pew. Big trades